How is everyone doing? Welcome back to another episode of The Banker Next Door. I'm your host, Dr. Joe Berquist. Today, I bring everyone another exciting interview. I have a great commercial banker with me today, Owen LaFave, and I'm going to bring Owen in here now. Owen, welcome to the show. How are you doing today?
Joe, I'm doing great. I'm coming from very hot Tampa Bay, Florida, but doing great. Thanks for having me.
Very nice. Awesome. So, and no, it's great. Yeah, you're from down in Tampa area. I love that area there. I've got, my wife and a lot of her family are all from the Florida area, basically over more toward Orlando and like Volusia and Seminole counties. But I've spent a lot of time in Florida, and it's a wonderful place. So I'm sure you enjoy working down there quite a bit.
No, it is a great market to be in. It's a great place to live. Everybody, live, work, and play, which is cliche, but really couldn't pick a better place. Although right now, like I said, it's a little hot, a little humid, but not jacket weather, but nonetheless, it's beautiful.
Nice. And we've been experiencing up here in good old Pennsylvania. We've been experiencing our own very hot summer up here. So it's been rather humid and hot up here. Yeah. So it's been a little nasty up here this year. So we're
you got a little taste of Florida up there.
Yes, I did. We do. Yes, we are. But anyway, so to kind of get rolling here today, can you just tell us a little bit about what you do and what you're doing in your market right now?
Yeah, so I work at the Bank of Tampa. We're Tampa Bay's oldest and largest community bank. We're a community bank. We're regional, just located. Our footprint is in the Tampa Bay market. We've got 13 locations. I am the Pinellas County market president. So the Tampa Bay market, for those that aren't familiar, is Tampa Bay MSA encompasses, and there's various definitions depending on who you ask, up to 9 surrounding counties. So I am in the second biggest county in the Tampa Bay market, and that's Pinellas County. And that's our westernmost county out on the peninsula. That's known for a lot of where our beaches are, the city of St. Petersburg and Clearwater. So I manage everything that happens and lead everything that happens in the Pinellas County market. So that's our C&I, that's consumer, that's any business that is conducted in Pinellas County, I am responsible for. And then enterprise-wide, the commercial real estate group reports to me and marketing reports to me.
Very nice. Very nice. And then, so can you give us a little flavor for like, what does your bank like to do? Are you guys primarily commercial real estate? Do you like doing a lot of C&I, SBA lending, or a little mix of everything? Like what's kind of the flavor of your bank?
We strive very hard to just have a very balanced portfolio. That's a third C&I, a third commercial real estate, a third consumer. So a little bit of an anomaly, I think, more for community banks, but also just banks in Florida. I mean, we're a growth market, so banks have a tendency to do a lot of real estate in this market. It's certainly a place that we play in, but we've always led. We kind of consider ourselves we're a commercial bank first and the bank of small businesses. So we lead with that C&I business. We bank the owners, the executive team. We're a full service bank, so we have the full array of consumer products as well, including a separate wealth group and trust group, but really owner managed businesses, the executive businesses. So lawyers, doctors, CPAs. We bank 40% of the law firms in the Tampa market specifically. So it's a great niche for us. But that's kind of where we focus. And again, I mean, we're full service. We're still looking at commercial real estate as well.
Very nice. And so I'm just a little curious here in the Pennsylvania market. I would say it's fair to state that pretty much, I think I would say, I don't know if I can say all, but I would say most of the banks up here in this market have generally seen a slowdown in the commercial lending activity. Obviously, interest rates, inflation have kind of, taken its toll. And it's a very interesting market because the customers are doing fine. We're credit portfolio is still rock solid, thank goodness. And, the customers seem to be doing well. They're just not, they don't seem to have a huge appetite for debt and borrow and taking on more debt at the moment. Are you guys seeing something similar in like the Florida market?
Joe, we're not going to spend the next hour talking about bond valuations. I thought we were going to talk about the future, the present stream of cash flow, the inverse relationship with prices and interest rates. And of course, I'm joking to the session that we sat in up at Stonier, but very similar dynamic in this market. I think customers are just looking at today's interest rates, and they're not excited to borrow. I think for the most part, they feel fairly, I think, comfortable with where we're at in the market. Would like to see a little bit more activity, but activity is good enough. And unless they really have some sort of capital investment that they need to make, they're very reluctant to take on debt at today's interest rate. I will tell you too. What's really interesting is our line utilization. So I think bank wide, both consumer and commercial combined is about 30%. So folks are just very reluctant to draw on their lines. Using cash. I think a lot of people are still flush with cash. And if we want to talk about the broader market, I know that kind of that lower quartile of consumers are starting to feel some pressure, and we're starting to see some softening in credit there. Not necessarily in our portfolio yet, but nationally, we're right in the middle of bank earnings season, so we're hearing all the banks report in on their credit cards and some auto loans, and seeing some softening there. But Florida's a little bit of an anomaly in the sense that we never really slowed down. We had a very, I think, open business climate in general, but definitely during COVID. A lot of our businesses continued to thrive and put away cash, and again, just no one's excited about borrowing at 8-9% interest rates.
I will tell you what, I was in Orlando just a few months ago in March, and when I was down there, we went to downtown Orlando. We didn't go like to Disney or any of the theme parks, but we were in downtown Orlando and then kind of around Orlando area, checking out some different restaurants and stuff like that. But I was blown away by how many apartment buildings and complexes were being developed, and I'm not talking about like 50 units, or I'm talking about 1,000 units, like 500 units, like huge apartment complexes. And it just seemed like everywhere I looked, another apartment complex was going up. And it was just something that I took notice of. And being a banker, you take, if you do a lot of commercial real estate, you just kind of really key in on that stuff all the time. And it was just, like I said, it was just something I noticed. And are you guys kind of seeing that in that Tampa market?
Oh, absolutely. We've got record deliveries, not only in Tampa, but Orlando, or the state, and really the entire Sun Belt. We are, I think, truly, at least from a temporary perspective, we're overbuilding. Supply is outstretching demand, but demand is still strong. It's just not keeping up with the amount of supply that's coming to market. And really, what's interesting is, as bankers, anytime you see that, you get a little cautious. You get very timid in terms of putting any new money out into the market, given the amount of inventory that's getting ready to come online, and has come online in the next 12 months. But because of the current interest rate environment, because of costs, land and construction costs, which really have not, we're waiting for construction costs to come down. And I can say that, as I talk to our developers and contractors, everyone has said that things are stable. Prices are not pulling back, but at least they're stable. And so that's welcome in the market. It's just really hard to get anything financed today. So statewide, when you look at permits, they're probably down about 40%. So we're gonna have a flood of units that's coming out of the market for the next 12 to 18 months. So there's going to be some softening in occupancies and probably rent rates. And then, providing there's not a huge recession, I think we're going to be back to 10% annual rent increases, because there's no inventory, and there's still a steady stream of people moving down here.
Okay, interesting. Very interesting. So, all right, well, let's switch gears for just a second. So can you tell us a little bit about your bank? Well, we talked about your bank, but and you gave us a great overview of kind of like where you're at. Are you guys just in Florida? Do you guys expand your geography outside of the state, or you're just a state chartered bank? Can you give us maybe a little bit of flavor for that?
Yeah, we're a state chartered bank. We're privately owned. That's the way we plan to be. We're a little bit of an anomaly in the sense that even though we're privately owned, our stock is very marketable. We've got a waiting list. In terms of ownership, about 25% is owned by the board. We have a very attractive ESOP plan, so most of the employees are owners and own a pretty significant share, and the rest of the ownership is through our existing clients. So it enables us to be patient and not kind of worried about the quarterly reporting and reporting to Wall Street. I kind of take a long-term perspective. which is a really nice environment to be in. But we're big enough to be meaningful. We're 3.1 billion. We're not huge, but we can compete with the regional banks and in some instances the big banks. So it's a good place to be, Joe.
Very nice. No, I like it. I love it. I love it. So now let me ask you, tell us a little bit about yourself, Owen. How long have you been in banking? How did you get to, where you've been at? Did you come up in kind of a traditional path into banking, or did you just kind of, like most people, kind of fall into banking at some place in time?
It's funny you say that, and I think most of us bankers, that's what happens, right? Like we end up none of us really aspire like when we're younger. You're like, what? I want to be a banker, maybe a banker on Wall Street. But none of us envision working for a regional or community bank. And so I went to University of South Florida here in Tampa, got my degree in finance after switching majors twice before. So I'm very diverse background in education. And then actually had a job with Morgan Stanley. This is 2001. So I didn't actually get to start because the economy started to slow down. Of course, the tech bubble was bursting, and of course 9/11 happened. But they called me up and said, "Look, we have a hiring freeze. Don't call us, we'll call you." And with a degree in finance, I found my way into banking, and very quickly realized I didn't want to go the retail route. I have a little more patience as I've aged. And have some gray in the beard, but as a young banker, I had no patience for retail. So started in credit, moved into a general lending role, moved into a real estate specialty. Actually left banking for 18 months and tried my hat to do some real estate development, and couldn't have picked a worse time. Left in late 2005, so we know what happened, and about 18 months after the fact, and found my way back into banking and into special assets, and back into real estate. Was recruited from a international bank to Bank of Tampa to start their commercial real estate group, and then has spent the last 5 years as one of our market executives. So getting to do a little bit of everything. It's been fun getting back into the C&I world where I really started my career, but yet still getting to play in commercial real estate, and then the marketing element has just been interesting too. I've always had a very I guess public persona here in Tampa, just from a sales perspective, and being involved in the organizations that as bankers we have a tendency to get involved in. So it's been fun, putting the marketing hat on and helping in that world.
Yeah, I tell you what, that is really great, and I can't believe you and I have a lot in common there, Owen. Is in terms of the ways that we kind of started our adventure into banking, because so I graduated from college in 2001, and while I was in college, I started working at a bank part-time, and I graduated kind of right into the
that's the way they're pulling it in, Joe.
Yeah. That's it. Like I graduated right into like the dot-com bubble bursting and 9/11, and then that little blip of kind of a recession that we had there. But I had the same deal. Like I had a degree in finance and economics, and I had done internships for like financial advisors, and I was all set to come out and go right into the investment world. And I was actually looking forward to possibly going up to New York to go work on Wall Street. And like I must have gone on 25, 30 interviews, and every single person was like, "Oh, your resume looks great. We love you. Call us in 6 months. Call us in a year." And so one day I was
walked a very similar path.
Yeah. And then so one day I'm at the bank, and it was just kind of weird. And I'll tell you this, long story short, there was kind of a big lunchroom, and everybody kind of shared that lunchroom. And I just happened to be in an office where the market president, regional vice presidents, like there was a bunch of kind of higher up people that were working there. And one day, one of them hears me kind of bemoaning the fact that I'm like, I can't find a job. No, everybody's blowing me off. This is ridiculous. So he sits down next to me and he goes, "Hey," he goes, "We really need a credit analyst. Would you be interested in maybe doing that?" And I laugh now because I leaned over to him and I was like, "What's a credit analyst? I don't know what that is." He started laughing, and he explained it to me. He said, "No, look, you underwrite all of our commercial deals and this, that, and the other thing." And he's like, "Look, we got a whole like training program. We'll put you through the training program, and you'll start out and everything." And it sounded like a really good opportunity, and I did. And like I said, there wasn't much else going on at the moment, so I figured, okay, I'll try that, and I'll see how this goes for a year or two, and then maybe go back from there. And next thing I know, 24 years later, still working in commercial banking. So it's like, so it's just kind of funny how you and I definitely have a lot of similarities there.
Yeah, I think it was probably, gosh, I don't know, maybe 11 years ago. I resided myself to. I'm a banker, and I'm happy to be here.
No, I hear you, man. I hear you. So, all right. So let's any general thoughts right now on kind of just the commercial market in general. Anything else that I know we kind of talked about commercial real estate a little bit there, but and people's kind of appetite for borrowing. But any other general thoughts just about interest rates or what you're seeing in the economy or just I don't know, just anything you might be looking at or thinking about at the moment.
Yeah, I maybe I would add, I just feel like we're in a little bit of a state of limbo, and I think
Hmm.
specifically when it comes to commercial real estate too, if you the stuff that gets the most action on LinkedIn or Twitter is all the if excuse the expression, but doom porn, right?
Hmm.
Everybody wants to hear all like the world is going to end and commercial real estate is going to crash and it's going to take down all the banks with it. And I'm in a little bit more of the glass half full. Not that we're not going to have issues. I mean, I think we will, but real estate, as you know, Joe, is something it's just slow moving. So
Yep.
we're kind of at the beginning innings of dealing with some of the challenges in the market. I mean, going back to the pandemic, you saw a big spike when the world shut down in retail and hotel. Both of those asset classes have improved. In general, they're not quite back to where they were pre-COVID, but all in have performed pretty good. And then over that period of time too, we've seen office continue to slip. So especially in those urban central business districts and the Chicago's and New York's, and of course San Fran is well publicized as having issues. So I think office is going to continue to be an issue for I think the next several years. Those leases are long for the most part. Everyone they're reassessing their space. Nobody knows how much space they need. They're reconfiguring, but so largely when leases are getting redone, they're for shorter terms and they're also for less space. So I think that world is going to contract. There's plenty of demand. I mean, amazingly enough, I mean we're building Class A office space here in Tampa Bay, and the moment that it gets CO'd, I mean it's filling up. So there is a move to quality. People are willing to pay for it. It's that kind of BC older inventory, suburban inventory that's challenged. Any construction that's been done in the last couple of years that's a floating interest rate. I mean those properties are going to be challenged. As you know, I think our regulators are encouraging us to work with our borrowers. So
Hmm.
as long as you got a debt service coverage that's greater than one and you continue to make your payments, we're trying to figure out a way to work with them. I mean, very much like you and your portfolio, we're very clean. A lot of that I'm just hearing from fellow bankers in the market. But I think we're going to have some challenges in commercial real estate. I think those waiting for the market to implode are going to be waiting a long time.
Yeah, no, I tell you what, it's a fascinating market because there are certain metrics that you look at and you go, wow, that's a red flag. Like that's a little concerning. But like I said, I mean, as far as when I look at our small to medium sized customers, they continue to just kind of roll along. Like they're not, their revenues are still up. They may not be blowing the doors off anything, but they're doing fine. Like they're not, like it's not a situation of people's revenues have dropped 10-20% and they're struggling to keep the lights on, and I'm getting calls like, I don't know if I'm going to be able to make the payment this month. Like I've gone through cycles like that in the past, and that's
Mm-hmm.
just not happening right now. I mean, right now everything is very stable. People's revenues are stable, even going up a little bit, maybe not a lot, but maybe 5%, 6%, something like that. And so you're seeing a little bit of growth. Bottom line numbers are fine. People's businesses are profitable. They're making money. They've got money. They're paying all their bills. I think the businesses that can have been more debt averse. I think they're steadily trying to knock down debt as best they can. So there's a lot that's going good. I will say I'm cautiously optimistic though, because I see bigger on the micro trend looks pretty good right now. It's the macro that I really worry about. Like I still look at the inverted yield curve. I look at, the regional banks and the type of commercial real estate, like you said, it's those big office buildings in the cities. How do they deal with that stuff? Do we find a way to deal with it, or does it eventually become a bigger issue? So I still think there are some clouds on the horizon. I'll say it that way. And I think a lot's going to depend on what happens with the interest rates here over the next 6 to 12 months. Does the Federal Reserve start to ease off a little bit? Do they start to bring the rates down a little bit? Because I don't think that will make a world of difference, but I think it will certainly help a little bit. I mean, if we go from an 8.5% prime rate to maybe 7.5, something like that, or maybe 7. Like I think that will certainly help a lot of people in terms of what they're going through right now. But but that's kind of what I'm thinking.
Yeah, I don't. So, I mean, the Fed is notorious for responding slow. I mean, we all kind of joked about transitory inflation, but I mean, part of the issue with the reason we're dealing with the challenges and banks are dealing with the challenges in their, in their bond portfolio is because we kind of got the head fake, right? It was, it's transitory, don't worry about it. But then we had this period of time for 12 years that interest rates were low, and we're kind of confident that inflation was going to pass, and none of us stress test for 500 basis point increase in interest rates. So I mean, a lot of us. I mean, you need to be prudent. You need to balance. You need to manage your balance sheet. But nobody was really prepared for that, and so now we're in a situation to where we're starting to see inflation arguably is kind of in that 2 to 3%. Big part of that, of course, is living and dwelling, and I'm not a fan of the way the Fed calculates rental with the owner's equivalent rent, because as you know, it's a survey, it's always lagging. So kind of expected to see that part of inflation drop quicker than it has, and it hasn't. So, but feel that inflation is kind of that 2 or 3% area. We've got labor softening. I mean, I think now's the time to kind of take the the approach. I mean, if we want a soft landing, I mean, now's the time to start rationing back interest rates. And I don't know that a point is really going to make much of a difference outside of sending a signal to the market that we've reached the end of the tightening cycle. We beat inflation. Maybe give people a little bit of a comfort, but I just feel we're going to respond too slow. We're likely to have a recession at some point. And part of the reason why we don't have enough, I think a recession right now is just so much liquidity was in the system, and consumers are finally starting to burn through their savings, and eventually that'll come to an end. And banking is cyclical, so when there's a recession, we will have some credit issues at some point.
Yeah, no, I agree. I couldn't agree more. Okay, so now we're going to get to one of my favorite parts of the interview. So I like to everybody I interview, I always like to ask them, because I like to tap into kind of the pop culture thing a little bit. So do you have a favorite business book? Do you have a favorite business related movie that you would like to share with everybody?
Joe, I'm going to be honest with you. I hate these questions. I am never good at, I don't necessarily have favorites. I mean, I could give you like lists of 10. I mean, there's a lot of great business books. I will tell you, just because it's a kind of recency effect, but, and it's business related, but it's not, but a book called Unreasonable Hospitality. I just finished it on vacation. Will Giarda, and I don't know if you've read it or not, but he was one of the partners responsible for 11 Madison, a famous world-class restaurant in New York that became voted the #1 restaurant in the world. And it's just his journey in marrying the back room of, well, I say back room because I've drawn equivalents to banking with my team, but the kitchen and like world-class food to service in the front. So in a lot of those world-class restaurants, those two don't intermingle, and they don't really know what's going on with the other one. So he kind of broke down the barriers and made service, part of their mission, a world-class service, and just doing stuff that was completely over the top that you would think was completely unreasonable. I've taken that from the banking perspective, and a lot of our backroom, to have a successful bank or any business, like all parts of the business need to operate successfully. So in banking, we need the backroom operations to provide an exceptional level of service. So all of us on the front line that are out there selling services and providing solutions to our clients, and that have a need, that it gets executed on the back end as well. So I've enjoyed that book. I mean, there's a lot of, E-Myth, Good to Great. I mean, there's a lot of the cliches, which are all great books for a reason.
Mm-hmm. No, I love that. I have not read that book, Unreasonable Hospitality. Unreasonable Hospitality, right? That was it.
Yep.
Yeah, no, I have not read it, but I have heard a lot of people talk about it. I think it sounds like a fantastic book. Sometimes you need to read things like that to give you a different perspective on how you're running your business. So, I mean, I totally agree with you there. And that's kind of the point of this exercise, Owen, is to basically draw. I love, again, this is why I asked this, because I get so many different answers from people who are looking at different things and examining different things from different perspectives. And then usually what you're doing, applying it back to your own business, your own shop, and basically saying, hey, listen, I read this really interesting thing over here from a totally different industry, but I think there's some great lessons here and we can apply this to what we're doing. So again, that's why I love asking it, but I will definitely check that book out. And I'll tell you, it's funny. I don't know if you watch Netflix or not, but
sure.
I just got engrossed. There was this little documentary that was about like a 2-hour documentary that was called How to Rob a Bank. And it was all about this bank robber out in Seattle who had robbed a bunch of banks back in the 90s. And it was really interesting. And I've gotten into a number of these like true crime type of documentaries over the years. And there's a lot of, a lot of crazy stuff. But I love kind of, exploring things like that and just kind of relating it back. And because especially something like this, like they were describing, there was a lot of conversation about like how he was robbing the banks and what he was doing and all of the security training and different things I've had over the years. They kind of kick in and I'm like, well, why didn't this happen?
You were taking notes and thinking, okay, this is the way I can do it better next time.
Yeah. But I don't know. It's fascinating. And I listened to like the FBI talk about like kind of like what they were, doing or how they were doing it or whatever. And, I have, a couple friends that work at like, local FBI field office here that I've made over the years. And, so we just kind of have some funny conversations about some of this stuff from time to time.
Well, then, for your perspective, knowing the inside, knowing how a bank works, I'm sure there was probably those moments where you're like, I can't believe they didn't do that. Like this is basic. Like how could this happen? We get trained, it gets drilled into us every year.
Well, yeah, and I think it's also, you look back over the last 30 years and you think about the evolution of technology, you think about the evolution of different, techniques in robbery training and stuff like that. I think banks do a far better job today training their employees in robbery training and standards and practices and procedures and all these kind of things that perhaps maybe not as well done back then as it is today. And then you just think of the technology, tracking devices, different security features that banks have in branches and things like that today that maybe those banks didn't quite necessarily have. I mean, I remember when I first started, you had to put VHS tapes in every day, to record. And if you forgot to take the tape out and put a new tape in or whatever, it recorded, but it didn't pick anything up. So if you got robbed or anything, there was nothing there. There was nothing would have been recorded, but now it's now it's all digital 24/7 feed. It just takes it in. You don't have to worry about stuff like that. Yeah. So I mean, it's so much, again, so much of that stuff has gotten so much better than it used to be.
But I think it's probably highly publicized now. I mean, I think most people know that. I mean, you're not going to get any money if you rob a bank. So it's where the money is. To your point, is that it's the technology, it's the fraud, it's the white collar crime. As an industry, as things have gone more digital and electronic, I mean, the evidence or the incidences of fraud are just through the roof, and they're always one step ahead. And we're trying to make up ground as quickly as we can, but. That's where the money's at. So I got a recommendation for you. I don't know if you saw it, but as a banker, you'd appreciate a Netflix movie, Bank of Dave. Have you seen that?
Yes, it was very good. Very good.
That was entertaining. Yeah.
Yes, it was very interesting. Yeah, very interesting movie. I mean, I think it's fascinating to kind of put yourself into his shoes and think about like, well, if I was in that situation, would I have done what he did? You know what I mean? It's kind of a fun game to play there, but it was very interesting what he did though. Very interesting.
Yes, and for those that don't know, I mean, it takes place in England, and it's a very different banking system. And he tries to start a bank, and they collude against him to prevent him from doing that. But he prevails in the end, so it's a good watch.
Kind of what happened to Metro Bank over there, but that's a different story for another. That's another story for another time.
Right.
Awesome. Well, hey, thank you so much for joining us today, Owen. I really appreciate you coming on. If anybody wanted to catch up with you or connect with you, is there a good way for them to do that?
Yeah, I'm most active on LinkedIn, as well as I also, Joe, have a podcast. It's called the Money Market Podcast. So very much focused on the Tampa Bay area, the economy, businesses, leaders in the community. But if you want to reach out, LinkedIn is where to find me.
Fantastic. And then that podcast, can they find that on any of the major platforms, or do they need to go anywhere specific to get that?
Wherever you find your favorite podcast. So YouTube, Spotify, Apple, we're out there.
I love it. No, that's fantastic, man. And I'll make sure to put in the description below, I'll make sure to put a link to that podcast just so everybody can easily find it. And again, thank you so much for coming on today, Owen, and definitely hope to see you again real soon.
Enjoyed it, Joe. Thanks for having me.
Thanks. All right, everyone. That was Owen LaFave. He is a market president at his bank down in Tampa Bay, and it was so great having him come on and join us today. I hope everyone enjoyed the conversation. So please make sure to go on and check out some of the other episodes that I have recently posted up. Remember that we are on YouTube, Rumble, and all major podcast platforms. Please make sure to leave your comments down below, as I always love getting back to everybody. And make sure to look out for some new episodes coming this weekend. And I will be sure to talk to everybody again real soon. Thanks a lot.